Hi, welcome to the Market Alert for Wednesday, the 18th of June 2025. So threats from Trump and hard data dump sink stocks and crypto and bonds, and the US dollar is actually bid. Today we're going to see the release of the FOMC meeting minutes, but the preview is that the Fed is too uncertain to change anything because of obviously the tariffs and everything else. So they're looking at around majority show one cut for this year. That won't be good news for Trump at all. And Iran prepares to hit US regional bases with missiles if Trump joins war. We don't want this escalating, that's for sure. I mean, there is a lot of talk about World War III now in headlines that I've noticed over the last couple of days as well. And then finally, US stocks sold off amid fears US will join the Israel-Iran war. So escalation appears to be the case. And even the Sky News website also speaking of this as well. Trump considering US strike on Iran, officials say. So we're going to see further escalation with this. So the main focus today, that is really a non-starter to begin with, because obviously the focus is going to be on whether Trump joins in with Israel and bombs Iran. But outside of that, we got the UK CPI is to show a fall, or is predicted to show a fall today, and then we have unemployment claims from the US, and then we've got the Fed funds rate and the press conference at 7:30 p.m. this evening. But like I say, that may take a back seat if we see the US join Israel later today in bombing Iran. Fingers crossed we don't see that, but you just never know with these warmongering people. But anyway, let's move on. Have a look at the markets for yesterday, which are looking a bit obviously weakish at the moment because of the uncertainty. The irony is that if they actually do go and bomb, the markets will then likely to go up after a few days, because again it becomes the norm. But anyway, let's go and have a look at the Dow and work our way through as we normally do. And in the Dow, yesterday we had some demand coming into the market. We're oversold and prices are still staying above the 51. The 50 EMA. I don't know where the one came from there. The 50 EMA, and looking like they're going to try and attempt to move back to the upside as well. Let's just have a look, see where we are as far as the recent high is concerned. This is not the all-time high. We're looking there at 43,121. At least I don't think it is. Anyway, let's just double check. No, nowhere near. Let's say it's in the region of 45,000, isn't it? So a long way off, but finding support at that 50 EMA there. 30-minute chart yesterday, we were sort of moving lower in the electronic, and then we moved up. And then the cash market saw prices move back, and I think obviously some retail investors there, sort of the uncertainty of the US joining forces with Israel, deciding to opt out. So watch yesterday's low, which is actually yesterday evening this low was made. So keep an eye on this one. But at the moment we're sitting at the DP trying to move to the upside there. In the German DAX, this too saw some demand for yesterday, but we are below the 50 EMA for this market, so we need to get back above this in order to move to the upside. Let's just see how much we've pulled back since we made this all-time high. Let's just see what we get. We're down just 1,200 points, which is absolutely nothing, considering it moved back up about 5,000 points, so a bit of a pullback there. It's got some demand coming in there. It's oversold as well, so we could see a bit of support there. Yesterday the market moving lower, it then made its way back, but then followed the Dow. Interestingly, we've got a gap here from last night that needs to be filled, so we may see a retest of the low to fill that gap before prices move back to the upside. And in the S&P 500, still in that sideways range at the moment, way above the 200 MA and the 50 EMA, and the 20-bar moving average also prices above this. So in the right order to still be bullish there. So no major sell-off at all. Yesterday this was all fine and dandy until the cash market opened. Retail selling came in. Market above the DP overnight, and not near yesterday evening's close, and no gaps in the market either. In the UK, the market is still sideways despite the government falling apart. It makes no odds. The markets are completely disconnected and are sideways to higher again, showing demand there as well. Maybe they've already preempted that Trump was going to join the war and have started to buy positions. 30-minute FT prices stuck in a sideways range yesterday. Got the CPI numbers this morning at 7 a.m. and we've got support at the DP at the moment. If those numbers come in at the forecasted 3.3%, then the market is going to move to the upside on that news. If it comes out higher, well, there's a problem for Rachel at accounts, that's for sure. So in the US dollar yesterday, as the headline said, this moving sharply to the upside. Again, that's indicative of when there's a war. I spoke about this the other day, that the currency becomes a safe haven. There's nothing safe about a US dollar that's devalued 97% since 1971, but it's still seen as a safe haven nonetheless. So dollar up yesterday and down slightly on the overnight. Now this is interesting because silver was actually allowed to move up despite the dollar moving up yesterday as well. So let's take a look at that. So here we go. We took out the 36.88 and we actually hit 37 as well, and overnight we're already up. We're at 37.26. So price is moving up nicely. The $40 level is going to be crucial. When we get to that, you'll probably see quite a sharp pullback if the market is allowed to move up another $2, of course, to that level. Actually, a bit more than that, nearly $3. But yeah, I mean, it's looking well. I mean, all things considered, it's certainly impressive that it's been allowed to move this far with no massive pullback. So again, let's just see what happens over the next few days. In the 30-minute chart, you can see the market moving higher there, but we still get a bit of a 2-bar slam, which is positive that the market picked up from there. You can see the volume there as the COMEX came on stream and the LBMA marking the price, or creating the spot price for silver for yesterday. Need to take out yesterday's high in order to move higher. Meanwhile, gold not so bright and shiny yesterday. The market sideways, but still above the 20-bar moving average and all the other averages in order. And it's just a matter of moving up until we take out the 3,500 level. 30-minute chart looks a bit crazy, sideways, and there's your markdown and being bought. And then overnight, we've also seen the market slammed again to 89% retracement there, down at the S1 market being brought back there, and price is now moving back up over the evening into the Asian session. There's just struggling a bit with the 200 MA, which it did there and had a shakeout. So let's have a quick look at the gold-silver ratio. So in the gold-silver ratio, we seem to have a dead cat bounce, again reaffirming that the bull market in silver may be established. This is unusual. We've had a dead cat bounce there where we filled the gap, then the market moved lower, and currently we're in a crucial area as well, about a 78% retracement from here up to here, projected back. The market needs to take out this low in order to keep things moving. So we've been up as high as 106 silver coins, down to 90-ish area now as well. So 16 silver coin drop there if you were buying 1 ounce silver coins to the gold price there at the moment. So let's have a look at yesterday's trades. And yesterday we kicked off in the pre-market session. There was not a lot to report, market quiet. I would expect the same today, maybe a retest of the low, because obviously apart from Trump invading, going to do battle with Iran on behalf of Israel, you can expect the market to be fairly quietish, I think, for both pieces of news. But yesterday the market moved down. Again, we have that classic pattern. We got to the low, the market showed support. What did it do? Shook everybody out with a quick drop down of 70 points and then brought the market back, which is no surprise whatsoever, because when you're below the low, the stops are going to be here. Take out the stops and then bring the market back, which you then see happen there as we go through the morning with the first successful buy signal. Then there was a second, and then we had a bit of a problem here. The market tried to go short, but already we got into the sort of area of, we've had the opening salvo. Now it's time to consolidate. And again, as I mentioned in yesterday's alert, all focus yesterday was on what the Fed's going to do with the interest rates. But there we had another spike to the upside. Don't know what that news is. Had a look around for it, but couldn't find anything. And then we see the market going sideways, unless the news was leaked beforehand, where you see the spiking up and then coming back. That's not uncommon either. You see how the market was holding the low, and then again we retest that low once more and go shake out below it, go down to the S1 before we try and come back. Like I say, the low and the high of the previous day are very, very interesting levels indeed. As you can see there, it's just like a magnet until we can get it above there, and then we can move it up and keep moving it up until we get to the pre-market Dow. Prices are sideways, and then we see the opening move to the downside as retail traders took profits as in the cash markets in the US, and then we tried to move higher there with a loss that occurred, and then it will get very tight and sideways there, again waiting for the FOMC meeting minutes later this evening. And then this one turns into a loss as well, as prices just wouldn't go down as we headed into the close of the session for 4:30, and then prices drifting lower, irritatingly just taking out the stop there and then moving down. But it's tricky at the moment for sure with these smaller time frames, not getting the trends like we had at the moment, because obviously there's too much geopolitical news. And obviously this week we've got the big one, the FOMC meeting minutes. Trump's no fan of Powell and vice versa, and he does have the power to actually steamroll Powell if he says no cutting rates, but if he does that, then there'll be absolute carnage. So I hope somebody's had a word in his ear, but then his arrogance is far greater than that. He wouldn't care. He'd probably have some futures contracts on the short side or through some secret syndicate. You just never know anymore. Right, that will do it for this one. Let's see what happens today. The FOMC meeting minutes tonight, and then I'd say there'll probably be escalation during the day as well. You'll see that in the charts as well. If you're long and you get a spike to the downside, it's likely that Trump has sanctioned the US bases around Iran to go in and start bombing. God forbid. Let's hope it doesn't happen. So on that note, as ever, thanks for watching. See you in the next one.